Hello, traders. It is 8:01 a.m. Chicago time on Wednesday, the 4th of August, 2021. Thanks for joining me. I am back and I'm happy to be here. I was off for 4 days and it felt like a lifetime, to be honest with you. It's so strange, although I was itching to have some time off. This is episode number 2044. Again, first day back since last Wednesday. Um, and we are raring to go. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, let's hop right into our convergent trading pre-market summary sheet. We can see here mild risk off coming into the day as the small caps lead the way down, and we see that all indices are off. European indices showing some strength this morning. Pre-market, we had GM and CVS reporting. GM came in at also Toyota. Actually, I missed that one. Toyota Motors reported. That's odd. It says it's reported, but I don't see a number, and that thing just popped in. Very strange. But General Motors reported $1.97 versus $1.34, surprised by 47%. And revenue came in at $34.167 billion versus 29, surprising by 17%. CVS also reported $2.42 and versus 206, also surprising to the upside in earnings and revenue. After the market closed, we have Uber, expected, McKesson, Fox, Allstate, and Electronic Arts after the close. These are high importance stocks, and that's what we've got in terms of earnings. U.S. employment is on deck. The non-farm U.S. non-farm payrolls are due on Friday morning at 8:30 Eastern. ADP came out this morning, and ADP missed. ADP came out at 330,000 versus the estimated 683,000, so it was a big miss. We saw the market respond slightly to that, selling off a little bit after holding near highs in the S&P and across the board. It came off as a result of that news. Again, earnings, we went over those. And then the other piece is corporate credit availability. Wall Street Journal yesterday reported that there's about $1 trillion of corporate credit that is available and unused by the U.S. companies, and that's there's potential for that coming into the economy as well. As far as the calendar, 9:45 market services PMI, 10 o'clock Eastern. We're looking for ISM services PMI. At also Fed's Clarita, and then 10:30 we're looking for crude oil inventories, gasoline stocks, and then at 8 p.m. total vehicle sales, usually a non-mover. The S&P has was balanced for a while. Now it's multi-distribution. The S&P is showing 166,000 contracts traded. That is well below the mode of 220,000. Still relatively active this morning. We have 17 and a quarter points of range. Overnight inventories pretty much flat. Much of the volume is circled around, is centered around or near the prior close, which doesn't seem correct to me. To be honest with you, I got to look at what's going on there. But intuitively or just common sense, it doesn't look like that is the case, because the prior close, it's going off it's going off of the session close. That's what it is. It's going off the session close, which makes sense. So inventories, I think, are more short than what is shown here versus settle. Settle is 44.15, I believe. Let me check. Settle is 44.15 even in the S&Ps. Remember The RTH session in the S&Ps or in the US indices is no longer at 415. It's no longer commensurate or in line with a pit. It is now in line with the cash. And the cash settlement, the official settlement price, is calculated as the VWAP of the last 30 seconds of trading when the cash closes, when the equity closes at 4 o'clock Eastern. So that has shifted some, the session has shifted a little bit. One of the things you want to pay attention to is how these rotations are progressing. Rotations are increasing. The ES has moved up to 5.25 from about 4.75. The NQ up to 24 from 21. The Russell up to 5.6 points. That is a 1 minute. That is what we would consider a normal rotation on a 1 minute bar chart. On about a sample of about 700 to 800 rotations. So that's quite a sample size. 20-day sample size. The YM up from 36 to 39, and crude down from 27 to 26 cents. This is what we would consider the normal ebb and flow of rotations in the market. In other words, this is the noise zone, so to speak. So that's where that stands. Let's move on and just take a look at, since I'm only coming back to catch up for the first time since the break, let's just do a general overview of what the market has done so far. We've put in a high last week, a new high of 2250 in the RTH session, in the pit session, and have been trading sideways since. We are now balancing around 43.90. We've held above 4,400 quite a bit. Yesterday was such a case, and it's just been gyrating back and forth around here. It is 2 weeks ago we had a big run up. We had poor structure. We still have a gap below us going into 60 something. There's a gap high right here at 62.25. There's still a small gap left, and every time the market pushes down into that 43.70 zone, the 65.70 zone, it finds buyers and comes back. And what we've been in is a bit of a megaphone kind of formation. You can see it right here, like that. So there's more and more range coming in over the last 3 days, last Friday, Monday, and yesterday. And today we're opening dead middle of yesterday's range, basically at yesterday's mid, and against the 4,400, a key century figure here. So I'm expecting this morning to be relatively noisy in terms of the open. We're seeing the ranges expanding. We're seeing volume increasing just slightly. A lot of volatility actually for summer trading. We're getting really decent ranges on a day-to-day basis. So that's where we stand this morning. The delta's not coming off the lows, making lower lows overall on a cumulative basis, and we keep flirting with this 20-day simple moving average again and again. So until we break below this, and remember, yesterday's low at 65.25 in the S&P was 2 ticks higher than last week's low. So we missed last week's low by 2 ticks yesterday. One-time framing on the weekly remains positive. There is no one-time framing on the daily currently, so we are in a neutral posture on the daily. We've been taking out the low, taking out the high, taking out the low, taking out the high. Again, that's what's creating that megaphone formation. And so what we have is a market that is in flux right now. Earnings have been great. The reports so far have been strong in earnings, but the S&P is having a hard time making and maintaining a consistent new high. It's making new highs, pulling off pretty strong, making new highs, pulling off pretty strong. But overall, we have not moved away more than a couple of percent from the all-time high. So very strong market. The Delta variant's becoming more and more important, more and more news on that. More restrictions here, even in my office in downtown Chicago. The building has put out a mandate requiring all tenants or all everybody in the building to wear a mask in common areas, which is something we got rid of about a month ago or a month and a half ago, where you could just walk around without a mask on if you're vaccinated, which I am. If you're not, please get vaccinated. And now they're putting it back on because the numbers are increasing again. Not interested in entertaining conspiracy theories or any of that nonsense, but the fact is, this thing is a concern, and it is showing. It is showing. The stocks that have a lot of personal contact or closeness are not responding to the upside. Stocks like Lyft, Uber, entertainment stocks, ships, cruise ships, and so forth. Tech stocks remain near all-time highs. So I think the market is saying that this is a concern, and as traders, that's what we have to focus on, not the noise in the media. Here's what happened yesterday. Let's remove the stock zones. Here's what happened yesterday. The market was pushing down. It looked like a trend day down to me. It got to 65 and a quarter. Remember, the weekly low is 64.75 for last week on the day session. And then just a massive rotation up, 17.5 points up, consolidates in a center. There's a lot of congestion there between 81, 82 and 74.75. And then it ends up resolving to the upside in what looks like a news event there. It's a 27-point rotation without a single 12 tick pullback, and so we have an impulse up. So the idea there is to look, and I was watching this yesterday. I was here in the office taking care of other things, but the idea there is to find a spot to lean against on the long side, and 95 held, so it continued higher. We finished very strong yesterday. Went from what was a trend day down off the open. Yesterday was an open rejection reverse type opening to the downside, and it turned around with a huge impulse and finished as a trend day up. Look at the point of control. The point of control is near the high. It exceeded the prior day's highs. It finished at the high on what is a slim, non-balanced, non-value profile. So the profile as well as the price action are saying that that this was a trend day up. Settle is at 44.15. The prior high was a 44.14. Very strong close there, but interestingly, overnight, the expectation overnight was that we would take out that high made during the session, and all we could do is get the 44.15. That's the overnight high for the session. So that's very interesting. 44.15 is the settlement / close price, and we've come off. So we've put in a relatively weak high in the overnight session and have pushed the low. It was at 44.04, went to 4,400, now 43.97.75. And the expectation is that we are likely to find support right in here. Wow, that's a slanted line. This 97 area, sorry about this line, it's terrible, but this 97 area right here was expected to be support. You could see it from yesterday here. You could see that it pulled back. Remember yesterday, it pulled back to 95 after that 27-point impulse up. It pulled back to 95, and that was the base. If they cannot hang on to this 97, then we are likely to get through this low volume node from yesterday's profile. Very important to come back to the high volume node in the lower distribution, which puts us at 43.80. Remember, between 74 and 82, as I'd mentioned, or 75 and 82 yesterday. A lot of balance before the break higher yesterday. If you remember that from the Renko chart, I'll show it to you again on Edge Pro X. On the active chart on Edge Pro X, it's kind of obvious. So if we push through this 95 area, then we are likely to test that 80 below, which creates a nice, clearly defined risk-reward opportunity. So that's where that stands. Again, we'll see how the open is, but we are inside of yesterday's range on what was a relatively wide day on a megaphone formation. Today will be an interesting day to see if they just take a break where we end up with an inside day, or if we find a base and push higher. Those are the two main ideas. I'm doubting that we would have another megaphone expansion where we take out the 65.25, and if we do and take out the 64.75, we'll have a new weekly low. So the one-time framing on the weekly would go away, and I'd expect some pretty decent selling once that happens. So that's where that stands. Anyway, so that's the narrative. Look at this action here. Completely sideways, folks. Just kind of hanging in here. I've got to admit that, it is the summer, mid to late July into August. This is the time of summer where people just don't trade. In general, the market tends to gyrate and not do much. And this year, I think we've been provided with a lot of opportunity. So we're thankful for that. Although I missed some pretty decent trading when I was off. As I always do every year, I choose the time to be off when the market has some pretty decent volatility in it. So that's where that stands. Let's take a look at the active chart. So I want to show you this. So here's the 95 right here. So you have this 4,400 area down to 95. We held the 97 as the low this morning, and we have this congestion to the left. So let me redo that. 95 was the low yesterday after that 27.5 point impulse up. And you can see there's a fair amount of buying. Look at this delta on that impulse. Pretty good buying there, mostly small lots. The very large lots were not active in there. Those are 100 lots or bigger. And we're pulling back to 97 this morning on what is a profile that is very much a price discovery profile. That profile is telling me a lot. But if we give up this 95 area, then we are back in this congestion zone at 82 to about 75 being a key area, 71 being a key area. 71 is the big MC point of control for this entire region going back to June. So if we break through this 95, I'm expecting us to come down and test this 81 area at some point. And that's a pretty decent trade opportunity there that we're looking for. You could see there was a bit of buying at the top that didn't go anywhere. An attempt to get back to the top at 1450. That was unsuccessful. And then you had trapped longs, late longs, with sellers coming in. And sellers are pretty active throughout this thing. So to me, it looks weakish, and it's about the open. Do we dip at night? Do we dip in the pre-open and then pick back up and push back in above the 4,400 and get back into the 44.10.11 area, the overnight point of control? Or do we make an attempt early to push higher that fails, which sets us up with an opportunity to look for the short, look for the break of 95, and look for acceleration into 91, and then ultimately looking for 81 to be taken out. So this chart here makes it very obvious what the key areas are. Again, 95, minor support at 91 here, and then once that's taken, we are likely to come back to where the market balanced substantially yesterday with a peak at 81. That's how that looks like, and that's one of our scenarios. So let's take a look. There's not much on the heat map, so there's no reason for me to show that. Let's take a look at what we're expecting for today in our expectation segment. Here we go. Oh, by the way, don't forget to hit the like button before you leave. On YouTube, please hit the like button, and this way it is easier for others to find this channel. So, what are scenarios for this morning? So you can see this acceleration down. That is an impulse, and the expectation is as we open, we are likely to be responsive to the upside. That response is expected to see a reaction in the prior overnight low at 05. 05, if I can put it up here. So I'm expecting to lean short against all the way up to that 05. I'm looking to look for order flow based input to look to get short against that 05, and looking for a lower top, looking for buying that is not getting anywhere, that is not moving price, and then a sudden turn to join, looking for that to come down, push the 95 into 91, looking for consolidation here, and then I'm looking for it to push into the 81 down here. 81 becomes the key target to the downside. Once we get that, look for a bounce into the close, looking for an inside day today. That is the main scenario for today, given how we are set up. Now, if we open up and we flush out early, push into 95, 91, consolidate, cross the opening price, consolidate, and start to squeeze higher, then your target becomes the overnight point of control at 44.11. So you're looking for an entry on a higher low into 44.11, consolidate, and I'm looking for them to knock out this week high at 44.15. Remember, it used to be an all-time high at 44.1450, I think, or 44.15. So look for them to push that, and then we would get a higher low, higher high on a daily, setting off one-time framing up into the non-farm payrolls. In that case, I'm looking for it to test that 44.22 above, which has a week high double TPO top at 44.2250. This becomes a primary target up here, 2250. Okay? That's where we stand. So are we going to get a reaction at 05? We do? Good. We're looking for it to turn over, break the 95, scale ahead of 91, target 81. That's your primary trade. That's the big trade of the day. If it tests lower and it's not able to hold lower prices and it crosses the open, look for a higher low. To get long, look to scale out at the 05. Look to push 44.15 as your primary target. The extended target becomes 22.50. That's the plan for today. Okay, those are the two main scenarios out of 5 that are created every day. That's where we stand this morning. I hope that makes total sense to you. Good luck, and I'll catch you tomorrow morning. Convergent members, remember, we have our AMA, our monthly AMA at 1 p.m. Eastern today. Please don't forget to submit your question before 12:30 p.m. Eastern for it to be included, and I'll catch you in there. Good luck. And the rest of you, I'll catch you tomorrow morning. Take care.